Luskin, Fed bullets aside, let me go to the Joe Biden news conference today. I watched the market trade down. He was so gloomy and doomy. And the more this fiscal stimulus package number gets raised from 300 to 4 to 500 billion, now maybe 850 billion, who knows? We may hit around trillion. Because there are no supply-side tax cuts, there's nothing for successful earners, entrepreneurs, the economic activists, and there's nothing for business. Is the market getting depressed on the eve of this stimulus package?
Look, there's no question about it. Everybody on the show tonight has already said it. I mean, it's the right way to stimulate the economy is to create incentives. It's not for Washington, D.C. to decide where money is going to be spent and give it to politically favored constituencies. It's to create incentives for profit making by cutting taxes, which raises the after-tax return on any given investment. That way 300 million Americans can each one of them decide exactly what risks they want to take, what ventures they want to pursue to create their own wealth and their own growth. That way you get the most diversified, best ideas. That's the way you stimulate the economy. So yes, it is terribly depressing to have Joe Biden give a press conference where he gives us his bleak view of the world so that, as Rahm Emanuel says, no emergency goes to waste. But Larry, the most depressing thing of all is not that Joe Biden, vice president, says such depressing things. It is that Joe Biden is vice president.
All right, I'm Luskin. Again, I come back to this point. The mustard seed of plunging energy prices. The oil price is a huge input to corporations. By the way, other commodities are an input. All that has gone away. It's a corporate tax cut. And secondly, consumer demand could pick up because of the consumer tax cut. Are we underestimating the profits outlook for 2009?
I think we probably are, but in one way I do agree with Joe, and that is profits are still coming down. Forward estimates, consensus is coming down. It's not going to have to bottom at as low a level as I think Joe fears, including for the reasons you've said. It's getting cheaper and more attractive to do business in America.
Can I just get a quick whip around? One word. Has the market bottomed? One word, yes or no. Don Luskin.
2 words, for sure.
I got another sort of semi-ugly story. Don Luskin, go to you. A dividend holiday. A dividend holiday. Now, this cannot be a good thing. And there's a lot of talk. First of all, you got some regional banks, Regions Financial, SunTrust. We already know the B of A is cut. Fifth Third, Washington Federal. But here's the killer. It is precisely the TARP 2, the son of TARP, which is coming down the road, which I do not want, but whatever I want, I believe it's coming. And we may have a congressional / Treasury / Fed order for banks to stop paying dividends, Don. That cannot be good, and it might even be real bad.
You know, this may be a place where we have to disagree, Larry. I don't think companies should pay dividends if they're not profitable. And on a trailing basis,
thank you.
Banks right now are not profitable.
All banks?
Well, as a sector, as a cap-weighted sector, so maybe the big ones are poisoning the well. But the point is, it is not rational for a company to borrow money, whether from the private sector or the government, to just turn around and pay that borrowed money to equity holders in the form of dividends. Dividends are supposed to be distribution of profits, not the distribution of loan proceeds. So if these are not profitable companies, they can be profitable again in the future and dividends can come back. But until they're profitable, it's only natural and honest that they shouldn't pay dividends. That
Joe
doesn't bother us.